Ever find yourself wondering about the best choice between a 15-year and a 30-year mortgage? Well, buckle up, folks, because we're about to embark on a journey of knowledge and discovery that could potentially transform your financial future. Today, we're diving deep into the world of mortgages, not just any mortgages, mind you, but specifically the 15-year and 30-year variety. You see, this isn't a decision to be taken lightly. The choice between a 15-year or a 30-year mortgage can have a profound impact on your financial health, lifestyle, and even your peace of mind. We're talking about a decision that could shape the way you live your life for the next few decades. But fear not, we're here to help demystify these financial instruments, to guide you through the pros, the cons, the intricacies, and the surprising revelations of each option. So, are you ready to dive into the intricacies of 15-year and 30-year mortgages? Stay tuned. Let's first break down the 15-year mortgage. Sounds like a quick payoff, right? But what's the real deal? A 15-year mortgage is a bit like a double-edged sword. On one side, you have the benefit of quicker equity buildup. This means that you're building ownership in your home at a faster rate. And let's face it, who doesn't want to own their home outright as soon as they can? Another advantage is that you'll pay less in total interest over the life of the loan. It's simple math. The less time you borrow money, the less interest you'll end up paying. This could potentially save you tens of thousands of dollars, money that could be put to use elsewhere. But then we come to the other side of that sword. The downside of a 15-year mortgage is that you'll be faced with higher monthly payments. And these aren't just slightly higher. We're talking about payments that could be hundreds of dollars more each month than a 30-year mortgage. This could potentially put a strain on your monthly budget, especially if unexpected expenses arise. And speaking of budgets, having a 15-year mortgage could mean having less money for other investments or expenses. This could limit your ability to save for retirement, invest in the stock market, or even just have some extra cash for that dream vacation. It's also worth noting that while you'll build equity faster, you'll also have less liquidity. This means that your money is tied up in your home and it's not as easy to access if you need it for emergencies or opportunities. In essence, a 15-year mortgage is a commitment to prioritizing your home loan above other financial goals. It's a path that requires discipline, a steady income, and the ability to withstand potential financial shocks. So, a 15-year mortgage could be a solid choice if you can handle the heftier monthly payments and want to pay off your house faster. But what about the 30-year option? Now, let's shift gears and talk about the 30-year mortgage. A longer commitment, yes, but could it be the more sensible option? So what's so great about a 30-year mortgage? Well, for starters, the most immediate benefit is lower monthly payments. With the loan stretched out over a longer period, each payment is naturally smaller. This can make homeownership more affordable on a month-to-month basis, freeing up your income for other expenses or investments. Another advantage is the potential for larger tax deductions. Since you're paying more interest over the life of the loan, you may be able to deduct more of your mortgage interest from your taxable income. This could potentially lower your overall tax bill, but what about the downsides? Well, one of the main drawbacks of a 30-year mortgage is slower equity buildup. Equity, or the part of your home that you truly own, builds up faster with a shorter-term loan. With a 30-year mortgage, you're paying more interest upfront and building equity at a slower pace. Another downside is the higher total interest payments. Because you're borrowing money for a longer period, you'll end up paying more interest over the life of the loan. This could mean you're paying tens of thousands more in interest compared to a shorter-term loan. It's also worth noting that 30-year mortgages often come with higher interest rates than their 15-year counterparts. Lenders charge more for long-term loans because they're taking on more risk. So, you're not just paying interest for a longer period, you're also likely paying a higher rate. In the end, a 30-year mortgage might be the right choice for you if you're looking for lower monthly payments and are comfortable with the idea of paying more in total interest. It also may be appealing if you plan to invest the money you save from those lower payments elsewhere, potentially earning a higher return. Clearly, a 30-year mortgage may be more appealing if you prefer lower monthly payments and want to invest elsewhere. But how do these two options stack up side by side? Now that we've dissected both options, let's recap what we've learned. We've journeyed through the financial landscape of the 15-year and 30-year mortgages, and it's been quite a ride. These two options offer unique advantages and challenges, and the best choice, as we've seen, largely depends on your individual financial situations and goals. A 15-year mortgage, for instance, is a bit like the hare in the fable Fast and Furious. It lets you own your home outright in half the time, saving you a significant chunk of change in interest over the life of the loan. It's a fantastic option if you have a steady income and can comfortably afford the higher monthly payments. And let's not forget the cherry on top: the lower interest rates compared to 30-year mortgages. On the other hand, the 30-year mortgage, our tortoise in the race, if you will, provides a slower, more manageable pace. The lower monthly payments can free up cash for other financial goals or unexpected expenses. It's an excellent choice if you're looking for flexibility and lower monthly commitments, or if you're planning to invest the extra cash elsewhere for a potentially higher return. But remember, it's not a one-size-fits-all situation. It's about what fits your life best. Are you a hare, zooming toward financial freedom with a 15-year mortgage? Or perhaps you're more of a tortoise, preferring a steady, measured pace with a 30-year mortgage. Maybe you're somewhere in between. What's crucial here is to understand your financial health, your long-term goals, and your risk tolerance. It's about taking a good, hard look at your financial landscape and figuring out which path will lead you to your dream home. So, whether you're a first-time homebuyer or looking to refinance your current home, remember to weigh your options carefully. Consider your current and future financial situation, consult with a trusted financial advisor, and make the choice that best aligns with your financial goals and lifestyle. Remember, choosing between a 15-year and a 30-year mortgage isn't just about dollars and cents. It's about what fits your lifestyle and financial goals best. Thanks for joining us, and see you next time with more financial insights.